Hi, welcome everybody. This is the
Okay.
Knoxville Business Growth Collaborative, and today we have a business law attorney where you can ask any questions that you have. Go ahead and put them in the comments or in the chat. And even if you are watching this after the event is over and you're watching the replay, then go ahead and put those questions in, and I'll just circle back and get those answered for you.
Okay.
Our attorney today is Chris Trump with Carasso Trump in Knoxville, Tennessee. And so he is an expert in business law in Tennessee. And we're going to let him take over here. There you go.
Hello. Well, so yeah, like I just said, we just started our own business as well. I was in a larger firm, 30 lawyers or so for many years, and so a lot of the issues. It sounds like many of you are kind of young in your venture, right? So, and there's a whole lot of things to think about when you're starting a business, and I'd never done it from the business side of things. And so, and that's way more complicated than the legal side, in my opinion. And so, but it's been fun. It's been an adventure. So, but I know like legal is like one of the last things people want to think about when they're starting a business. There's number one, it's an expense that doesn't really add direct revenue, right? Perhaps it prevents some revenue flowing out the door if you don't do it right. You could be in a situation where you have to make some payments you didn't want to make. But it's like it doesn't bring the business in, that some of the other the expenditures you're making are. So a lot of people, they wait to do the things that they probably should have done from the beginning, and it does end up oftentimes resulting in more costs. So I'm here though. I've got a bunch of things that I can certainly talk about, but what I'm more concerned about is what's on your mind. So if you guys have any issues that you're in particular interested in hearing about or have questions about, I'd love to start there. So yes, Michelle.
I have a question. In photography, you have your contracts for certain things. And then there's some people, they'll say, you can put it in your contract, but it doesn't matter because even unless you take them to claims with that, how do you kind of enforce your contract in a sense without, like creating a bigger issue or things like that?
Yeah.
I know it's a broad one.
This is not going to be a very good answer for you probably. So, I mean, it's a cost benefit analysis issue every time you have an issue with your contract, right? So yes, maybe your contract has all the precise language in it, and you have all the rights in the world to go after your client for, failing to pay the second half of the fee, but the fee's $300, right? It'll cost you more than $300 to go to court, to do that. Now there is we have a general sessions court here in Knoxville, which is our small claims court, and you can kind of limp your way through and do it yourself, and go to court, and then court will order them to pay and give you a judgment for $300. But then you're like, well, how do I get that from the guy or the woman, and so you have to do that is another step that costs money, and most people don't know how to do it on their own. But a lot of people sometimes when a court says, "Hey, you owe it," because it shows up on their on credit reports and things like that potentially, and so a lot of times they'll pay it at that point. But a lot of times they just don't show up. You get $300 judgment, and what do you do with it, right? And so I would say that what you're really concerned about is kind of bigger issues. You know what I mean? And so there are some things you have in your contract. Let's say you lose the whole wedding, right? Card with all SD card that has it all in there, right? That's a bigger issue. That's potentially thousands of dollars that you could be liable for. And so, but if you have stuff in your contract that limits your liability, you could be you could be okay.
So yeah. So the contract more ends up being protecting you from the client to you, or so you really enforce.
It depends on how how big the issue is, right? So I don't think any of you guys sell products, do you? You do, but you do it for your employer, right? So are you a subcontractor?
Yeah, basically.
You are? Okay. You are a subcontractor?
It's kind of like a franchise, a little bit different.
Yeah. Okay. Okay. But you're soliciting orders.
Yes.
You're not
Everything
actually.
goes straight through Verizon.
Yeah.
Use their software.
You're an independent sales rep, basically.
Exactly.
So, okay. Gotcha. Yeah. So none of you are selling products, but like products can be a big issue. You know, if you're in essence kind of selling a product, right? So photographers do in a way, but it also is considered a service. It's not like you're giving them the actual photos; you're giving them digital photos. You know, although at times they probably purchase, sometimes they purchase, right? But like if you're manufacturing something and you sell it to a customer, then you're going to be in a position where if let's say I have a client that makes equipment that makes things, okay, well if it shorts out and burns the factory down, do you have the protections in your contract that will prevent you from being liable for the factory being burned down? So that's that you so it's all magnitude, you know what I mean? So if the client doesn't pay you $300,000, then it's worth filing a lawsuit for them, right? So and or if someone tries to get out of the contract, I could see some situation where some of you photographers and you in particular, maybe enter a contract where you provide services for a long period of time and are guaranteed certain payments along the way, right? Well, that might make it if someone breaks it in month 2 of a 2-year contract, then that might be worth being able to sue for them. So so yeah. The other thing too is like if and some people will step you, they won't pay you, and it's not worth doing it, right? Some people are principled and say, hey, I don't owe this to you. I can, but I'm just not going to pay it because I'm upset with your services. Well, that person's probably going to pay if you did take it to general sessions court. If the court says you got to pay, they're going to pay. So, what are some other questions you guys have? Yeah.
So I book vendors. They have a contract, but I have a vendor contract. Clearly want them to sign my contract more than I want to sign their contract. So I know we both can't sign each other's contract, so that pretty much negates everything, correct?
So let me make sure I understand. So you have customer, you have client, right? And you're booking a vendor for the client's event. And so sometimes you actually enter into a contract with the vendor.
If they have so like for example, I did
Do you do that for yourself or on behalf of the client?
so it all goes through me, so it does run through me.
So your
So
company's
we
on
do
on the vendor list. Okay, gotcha. Okay, so you're subcontracting some part of your services, basically. Okay.
Yeah. So yeah, like for example, I did pony rides in June, so they had a contract for me, and I had one. Of course, theirs is a little more specific to ponies, or mine's more specific to just for me. But so
Right.
is there a point where I should be like, I'm not signing yours, I'll only take you if you sign mine, or it doesn't matter that much? Or?
Yeah, that's a great question. And so the first question is like, do you need a contract at all? Okay, the first thing. And so I think we've just discussed there's lots of different things that you might want in a contract to protect yourself. Or the pony riders, are going to be they're going to want to make sure they get waivers, they have all those things so they don't get sued if someone gets hurt, right? And so so they're going to have they're going to whose contract wins in that situation is really just who has the most bargaining power. If there's 10 different pony riders, pony renters out there, then you say, I'm not signing it. You have to sign mine, and then they'll have to decide whether they want it or not. I mean, that's basically what it comes down to. But reality is most of those times in the situation, the one who's actually doing the work has the contract. So in that case, because they do want the protections associated with their particular line of business. Your agreement's not going to, unless you have just a pony, leasing company, vendor agreement in your repertoire. You're probably going to have to sign them. So then the question is, what do you negotiate? Do you go back and say, you look at it or just sign where they have? And so it's one of the questions I thought you might be interested is when to have a lawyer look at a contract, right? And so, and it's kind of a cost benefit analysis, as we were saying with like a lawsuit, it's like, okay, well, how much money am I actually paying this person or receiving from them? Okay. So that's the first question. Is it, is it substantial? Is there substantial risk? Even if it's not substantial, it's like, for example, let's say you photograph a wedding, you charge $5,000. Maybe that's not substantial, but like the risk, the liability associated with like losing someone's wedding photographs is probably pretty high. It's probably more than that $5,000, potentially. And so in that scenario, you'd want to make sure you have the protections. And so even though it may not be a substantial number, in the big scheme of things, it still would be something you would be very important for you because the risk of not having a contract is very great. So like you go to every time you buy and sell a product, let's say you go to the grocery store and you buy a product from Food City. Okay. In that scenario, there's a transaction that takes place, and you're not going to have a little contract that you submit to Food City or they submit to you. So when you're selling products, which I quite honestly am not sure whether photographs, the digital images would be considered products in a sense because there's a body of law that basically supports all those transactions you're making with at Food City. Okay, it's called the Uniform Commercial Code. Okay, it's Article 2, and it basically provides all the things, all these rules for what happens when something goes wrong in that. So, like, let's say you buy something from a wholesaler, like maybe you're buying a bunch of frames or something, Whenever you buy those products from them, and it comes in, like you get maybe 50 of them, the Uniform Commercial Code provides all the deal terms for you. Okay, if you don't have an agreement with them, it's what governs. Okay, and so when you're selling products, there is a body of law that is supplied, okay, to cover that transaction. There's not the same one when it comes to providing services. You don't have this body of law. That body of law for the UCC covers like warranties. It covers limitations of liabilities or types of liability that you may be subject to. The seller of the goods might be subject to if the goods are bad. And so, but the services don't have it. So the only way to have anything that kind of lays out kind of what your rights are and obligations of the parties is to have a contract. And so it's in like one of the biggest issues of all is like, well, what services are you actually providing, right? And so, so having a detailed description of what those things are on the front end is very important. And then what happens if someone doesn't fulfill their obligation? What warranties are you making for the services? What warranties are you not making for the services? And I say warranties is basically saying, hey, I'm guaranteeing your product, these services will do this, right? Or I'm guaranteeing that this product will do this, right? That it will. Sometimes it's as simple as, it'll meet your specifications, what you ask for. Sometimes it's the UCC provides some really broad liabilities that you would never want to make, in a sale of products to someone. So, and a lot of people, the courts have begun to supply some of those warranties to services too. And so the courts are all over the place on those things. And so you want to make sure you have limitations of liability in your agreements with people. And so really it's kind of like the first issue is like, how big of a risk are we talking about here? How much money is at stake, right? And then secondly, what type of protections do you need in this transaction? So like for them, the pony folks, their liability is potentially huge.
Yeah.
Someone gets bucked off a pony, even though they're only getting paid $500 an hour, for the ponies. So not much money, but their liability is huge. So they need to have one. So, and then the question is just, whose contract is going to apply? And typically it's going to be the person who's providing the service. But you do have the ability to negotiate. You can say, hey, I'm not going to agree to this. This is stupid. You can mark it out, initial. So, and then the question is, when do you get an attorney involved? Well, that's when it's when it's a substantial contract. Let's say you've got, Rachel's got a client that is wanting to pay her, $15,000 a month, to do services for them, and so she, she probably wants an agreement, a really nice agreement. You probably have a form agreement you're using for your services right now, right?
Yes.
And so if they mark it all up, you send it to them, they mark it all up and send it back. Definitely probably ought to have a lawyer look at it if you're not comfortable with what they're changing. And so, but if you can use your own form, the best way of handling that is to use your own form and have it vetted by an attorney on the front end. Okay. So that it's tailored to what your business is. It's tailored to the risks associated with your business, and it is. There's a man on me. Yeah, you sent him over here, didn't you? You sent him over here. Anyway, and so the use of forms is a very helpful way of mitigating your risk and working with an attorney to get a good form. I understand the temptation to just pull them one off the internet, and hoping that that's a good one. But I've seen many situations where that's gone awry because it was tailored for a specific transaction potentially or a specific company, and the way they do things is, number one, they may have pulled it off the internet from somewhere, and that person may have pulled it from somewhere. Who knows if it's ever been looked at by an attorney at all? And what often happens is, you end up in a situation where someone has made changes to what the attorney did along the way, and I'll give you a little horror story. People tend to like those. So, but I had a client that was a owner of a business with some other people. This guy that helped brought them all together to buy this business, he just pulled an operating agreement for his limited liability company off the internet, and they all signed it, right? Well, he did some bad things. They decided they wanted him out. There was a provision there that says they could expel him. Okay, might not have wanted that had he thought about it. Okay, so he was expelled, and it also provided how much money he was supposed to get when he's expelled. Okay, now this company has substantial revenues. It was in the red at the time, but it had substantial revenues. And the formula for deciding how much he was to get paid was based on the net income of the company, which there was none. So technically, they could force him out and buy him out for zero. Okay, well, they didn't. They paid him some, and he eventually sued and tried to get more, but the company they basically bought him out for $55,000, and about 5 years later they sold it for $30 million. So, that was a good piece of lawyer on my part, if I do say so myself. That's one of my more proud ones. So to get him out for 55, but quite honestly, there was no guarantee. It was the efforts of these other folks that got it profitable and had it valuable. But he did help build it from the beginning. So, but that's an example of he pulled it off the internet. And ended up costing millions of dollars. So
you said something a few minutes ago that I think applies pretty well to my company. Even if I'm not charging a lot of money, if I'm managing your CRM system for your company and I'm building your funnels, if you perceive that I did something to ruin your business, and even whether it's true or not, then they could sue me.
You have, as a professional, you have an obligation to provide your services in there could be basically, if you don't have a contract that says, hey, my liability is limited to this, they could definitely say, hey, you perform this negligently, okay, performing services negligently, or that there should be some implied warranty that you're going to provide the services in this way, and that they work this way, and if they don't, then you could be held liable potentially. So
do you recommend a scope of work in some cases that goes with the contract?
So one of the big issues you run into is what work am I doing for this person? If you're thinking this and they think this, then if it's not in writing, who is right? You got to go back and look at emails. You got to look at maybe invoices potentially, but they may be disputing the invoice. Having a very detailed scope of work is very important for folks that are providing services. That particularly if they involve deliverables of some sort, or milestones. You want to make sure that you're on the same page. You could be held liable for not meeting a milestone by a particular deadline. And so your agreement should be very carefully worded so that you're not, held to deadlines. Particularly, I was drafting one just the other day for someone that does marketing services for people, and the issue, if you miss these deadlines can be very important. You can miss opportunities to do, but if the customer, your client, is not giving you the information you need to meet that deadline, and they could say, well, I was waiting on you, right? So, but if you had some language in there that said that, hey, but we can't be held to our deadlines, or at the very least said, well, I had both of these in the agreement I drafted for them, but the other one is, if you don't give us the information, the deadlines are going to get adjusted. So the timelines are going to be adjusted. So
this is a follow-up to that, because I have written contracts and policies and agreements, and I did put my scope of practice in there. I haven't started yet, and I will seek advice from an attorney because there's just some things that I need to know. But, I will have milestones for clients from my services, but also tend to say follow.
yeah. Well,
so that's like the fine line.
I think in your particular instance, you're probably, if you're talking about nutrition and like the impacts of the nutrition,
Yeah.
I think I would be saying, hey, we're not guaranteeing any results,
Yeah.
and so that's, unless you are,
Yeah,
which
and
that would be dangerous. But
Yeah.
so
Scope of practice that I'm not a physician, I'm not going to.
yeah, you would want all those things in there. Exactly. Yeah, exactly.
Yeah, even in mine, I always say that I'm not responsible for the sales of
Yeah.
how your business fluctuates has nothing to do with what I do.
Although it does potentially, right? But you can't guarantee some
Right.
level of because someone they may be crappy at what they do,
Exactly.
So
Yeah.
Yeah, you can
To
make
keep it
great
clean for the
graphics
clean
and
comedian.
ads,
Right.
and they may have a bad product and
Yeah,
bad
I
customer
agree.
service.
I put in if your aunt or uncle tries to take videos and stuff in front of me in front of the first kiss, we're gonna
Yeah,
like that.
yeah.
but We're not liable for what that if we're prevented from doing our job by a guest, offender.
Right.
And really, in your situation, you or someone could get hurt if someone is getting in front of you and you trip on them and
yeah,
A lot of that in that artistic style teaching, where we're trying to fluctuate and learners that know that whatever our style is can change.
yeah, absolutely. And even like between photographers, it's going to be different, right? So,
I have a question about like events.
yeah,
So if someone buys a ticket to an event, and then sometimes you'll have like a little thing that says you agree by attending this event that your photo or video would be taken and used and stuff like that. Because I've entered into the agreement with the festival management to take photos and videos and things like that, and there's no way to like have every thousand
Right.
people sign a waiver and stuff like that. Is that something that holds up if it's in the ticket that they're agreeing by attending the event if their photos taken? Now, mind you, most of the time it's like, hey, we're taking a photo for this, but if you have to just
candid shots.
yeah,
Yeah,
exactly.
crowd shots.
And then it gets thrown up on a billboard by them because like not me, but you send them off, and then whoever
yeah.
has that.
Yeah, I quite honestly, so there's a couple. I'm vaguely familiar with this. This is getting into intellectual property, and name, image, and likeness, and so that's not my expertise, the intellectual property, but I know enough to know that if you can get release, then do it, consent. But particularly if you're going to use it in marketing materials, if you're going to put it on a billboard, but there is some like if you're in a public event, that anyone can buy a ticket to and go there, there's some implicit consent associated with that, just being taking a picture in public, but the type of use mandates more consent
Like if
potentially.
you're selling something like versus using it on
Let's say for instance I had a MAGA hat on, Make America Great Again. So my last name's Trump, so I'm actually gonna have made for this election season making the name great again. So I'm gonna say- so, but anyway, and so so if I have a MAGA hat and I'm selling MAGA hats, and then someone takes a picture of me and someone sells MAGA hats, just makes me their
Their
spokesperson in
yeah.
essence. They're for everything. I think in that situation I'm going to have a claim, right? But if they post a picture of a bunch of people at a party on social media that I happen to be in, it's probably not going to be an issue. You know what I mean? It just kind of depends on the type of use. So
Nonetheless, whenever I take my live music photos, I have no one except for that one or two people who are on stage. Because usually where some places where I go, where I stand, there are some people around me.
right.
And so, of course, I'm just going to these shows for right now just to build my brand, just get my name out there. And so I don't really have any. So I wouldn't really don't have any contracts or anything. But it's just out of respect for that other person to not include those photos or at least crop it to where they would not be in the picture
What are you using the photos for?
concerts.
Like what do you do with them after you take the photos?
I edit them and then post them on.
As part of your portfolio or something like
Yes.
that? Okay.
Yes.
Yeah.
I have them on Facebook, Instagram, and Flickr.
Yeah. And you're getting this the more nitty gritty of it there. I don't know, because that, you have someone who's actually performing, right? And so
Right.
they already have
But
some
what
notoriety.
what I mean is, I
The
crop out people who are
people,
in the audience.
Yeah.
Yeah, but you'll find that if then that music that you hire you to take photos,
They want the audience.
They want people showing it. So then that's where your difference is. When you're doing something like you can go out here now and take a photo and just be like, I do street photography. If someone comes up and say delete it, then yeah, you should. But more often than not, it wasn't like supposed to be photos you see National Geographic. No one said, yeah, you can use that photo on the cover, while I'm
Right.
off and stuff like that. Because there are different rules of it and what it's sold. I didn't know if you knew anything about that, since we're like the coordinator's the one who's hired you, you're gonna
Right.
contact them, you say, hey, you're letting your people know that we do marketing. And then you're just
Yeah, and typically the best way to protect the venue for them to protect themselves is to have an agreement, terms and conditions when the tickets are bought that
Right,
says
okay, so
that,
that's what I'm asking.
yeah.
So in
yeah.
the tickets, it's the terms and conditions of, hey, you know that.
Because they're probably
by
buying them
the
online.
festival-
They're probably buying them online.
Exactly.
Yeah. And so,
Okay.
yeah.
Yeah,
That's how
the
it's
one-
typically handled. So, yeah.
Yeah, okay, the ones I've been hired to, we had that in there, and I just want to say, make sure.
And you're just the service provider for the venue, right? So,
Right.
so the venue is the one who is going to own these photographs afterwards, and so they're the ones that need to make sure they're going to use them afterwards. They're going to make sure they have the ability to provide them, get that consent from everybody else to however they plan to use. So.
I have a question
Sure.
about, so what would go in an addendum in the contracts that I've signed before? Some things that could change and probably will change.
Yeah.
You'd want to put that in an addendum so you're not changing the entire contract every.
Yeah. So when we're building a set of forms for someone, a lot of times we will take the items that change, like price, quantity, those types of things. Territory, if it's like an independent sales agent agreement, that'll be on an addendum so that you don't have to tinker with any of the items in the agreement itself, so, and it's just simpler for the client because they can just go in and change the addendum, and we'll even create a template addendum for them that they can then go in and change, and it's a cost effective way. And I've had plenty of clients that I've had to educate how to consume legal services. So
Talk
So,
about that.
so on contracts is a good example of that. So I have these clients that anytime they're looking at going into a new project with someone, they're asked to sign an NDA. Well, they've just kept sending me everybody's NDA every time, and I'm reviewing it and having to make changes and negotiate the NDA with this other side every time. I'm like, you're paying me too much money. I was like, there's a more cost-effective way of doing this. Use your own NDA, use your own NDA. And depending on the situation, you may have enough bargaining power to do that. And so, and most people, some companies, they don't even have them reviewed, and so we create a form NDA, and then he sends it off. I've even gotten so far as to educate them on what could be changed if they marked it up. Like if these things change, call me. If this changes, it's not that big a deal, that kind of thing. And so, but use of forms is a great example. So I have plenty of clients that sell products and services, and so every time you buy a bunch of products and services from my client, the question is, what agreement applies to this? Okay, so without an agreement, the UCC will apply terms to the products, okay, to sell the products. And so, well, those aren't good because they're very not seller friendly, okay? A lot of warranties that you would never make, okay? Zero limitation liabilities, wide open ability to get consequential damages. So like that factory burning down we were talking about earlier, all the lost profits associated with not being operable for the rebuild, that could be pinned on you under the UCC. Okay, so you don't have the disclaimers, you don't have the limitation of liability language, you don't have the indemnification language, and so I'm buying products from you. What typically happens if a company's buying a bunch of products from someone, they submit a what? Purchase order, right? On the back of that purchase order is a bunch of terms, okay? It's typically all the things that it's going to be very favorable to the person submitting the purchase order, right? If you send an invoice back with the products and there's no terms on the back of your invoice, then their purchase order terms apply. There may be some bad language in there that you're liable for a lot of things, okay? So then the question becomes, well, what if I submit an invoice that has my terms on it? Which one applies, the purchase order terms or the invoice terms? And this is the same way with services too, right? People buy services through purchase orders. You may want to work with a large company, and they submit you a purchase order sometimes, don't they? So you have an invoice that has terms. They have so well, the UCC says in that situation, it's products. And I think that this is extended to services. I think by case law, I would think court would take a similar approach potentially. And the situation, there are provisions that conflict with each other, they're knocked out, okay, and they don't apply. If the UCC is there, then it's going to apply, and that may again put you in a situation that's very unfavorable to you as a seller, right? So you don't want to get in a situation where you're have competing terms, purchase order, invoice. And so my client, what they were doing was getting a bunch of purchase orders that conflicted with their terms and conditions on their invoice. And so they were having me review all these purchase orders for clients, the same client. And so I went to him, I was like, listen, this is ridiculous. You're getting, what you need to do is you either got to tell them I'm not going to accept your purchase order with terms on it, because my invoice terms have to apply, or we negotiate the purchase order terms and conditions every single time. Or a lot of these customers were repeat customers. They're issuing multiple purchase orders over time. In that situation, it makes a lot of sense to just do an actual supply agreement where we lay out this and lay all the terms and say that no terms on the purchase orders or invoices apply. And so the other thing is you don't have a form contract. Someone just submits their contract every time. I'm reviewing it for you every time, marking it up, making changes, right? Well, then have an form NDA, have a form contract that you know and feel comfortable with, and submit it and use it. And so that will prevent you from having to be in a situation. But you just sometimes, one of the big issues you run into with smaller companies is sometimes you end up working with larger companies, and they have an imbalance of bargaining power, and they'll come to you and say, you got to use my form. In that situation, if you really need the business, are you going to say no? You're probably not. You're probably just going to sign the thing and take the risk, right? Well, one way that you can decide whether or not, in making that decision, you could actually say, hey, go to your attorney and say, hey, can you look at this and just look for some big ticket items and see if this is something I just need to pass on. If the liability is too great, then that would then, and so I do that quite often for clients. I just look at it and say, hey, they're not going to negotiate this. I don't want to spend money for you to negotiate it. I just want to know what my risks are here. And then, if it's not too bad, I'll make the decision whether I'm going to sign it or not. So, but you'd be surprised sometimes though, bigger companies will actually negotiate it. So if it's a really important contract to you and you want to do it, but you're saying, I just can't bring myself to accept this risk level, then they will oftentimes, make some changes for you if you need them to. So particularly if it's like, there's language that it's not very applicable, right?
So speaking of, we're in the area of how to consume legal services. I love that. It wasn't a question I thought of, but some of the things you're describing, like the one-off contract or a phone consultation, do you go that small with the client? Like anyone in the room can just hire you for a brief?
Sure, yeah.
And I know brief is a word I probably shouldn't have said, but a short period of time.
Yeah. I would say that, depends on kind of like how important this is to you, you know what I mean? And so for me, my billing rate is at a rate level that may not justify that. Maybe you better working with a younger associate or a, less experienced, attorney, who would be very comfortable with something like that, but not charge you as much. so we have the ability to do that. So, normally right. Sometimes that's a great entryway to a
Sure.
relationship,
Yep.
So sometimes I may do that, for someone for pretty inexpensive just to kind of help them out, So.
Nice. Well, we're doing great. Talking about contracts, seem like there's a lot of interest. He's prepared to talk about entities. So partnership, S Corp, C Corp, those kind of things, LLC.
Yeah. So let me ask you guys a question.
Mm-hmm.
Do you all, who is a sole proprietorship? Okay. Who is an LLC? Okay. Who's a corporation? If you're nothing, you're a sole proprietor.
Partnership.
Okay. All right. There you go.
If you're nothing.
My next question is going to be, how many of you have partners, business partners? Raise your hand if you do. Just you. Okay. So you are by definition a partnership if you have not formed an entity. So you're right. Yeah, you're right. You're right. Do you have a partnership agreement?
Yeah, it's my dad, but we do have an actual, I used to work for a lawyer, so I'm always like, hey, what was your partnership agreement? And I just we went through it, but yeah, so we have it there. If one of us dies, what our split is, stuff like that.
Okay, yeah.
So at least you're both sole proprietors? Is that how you do it?
LLC.
Oh, you have an LLC.
And you have an LLC.
Yeah,
Currently.
currently.
You're looking to change that.
Yeah, I got screwed over for taxes. Lost, I guess I can't say lost, but I owed $10,000 because I made too much money. And so one of my clients actually recommended an S Corp, so I'm trying to wage the battle with my accountant and just try to figure out.
Versus being a single member LLC, is you're a single owner. You're a single owner, so you're both single member LLCs. Okay. And so, but some of you are not. You're not. You said you're a sole proprietor, partnership, and you're sole proprietor currently. Okay. And I guess is your name on the contractor?
No, it's my parents that own the company, but they're sole owner though.
So okay, they own together. Okay, gotcha. Yeah. So the first question people ask me is, when should I organize an entity? Okay, and so there's numerous factors. The first one to think about is there more than one of you? Do you have a partner? In that situation, you are going to by default be a partnership. Okay, and so partnership, and we can kind of talk about the different types of entities. But if not, then you're going to want to form one of the other. You can either be a partnership or you could be one of the entities that you would form. Okay. Sole proprietorship is default for if you don't have an entity and you're doing all the stuff yourself and not sharing profits with anybody. So sole proprietorship is a pretty simple scenario. You don't file a separate tax return, right? And you all the expenses, business expenses are yours, and all that you can deduct, all the income is yours. You pay all the taxes, and it's just a schedule you file with your tax return. The big problem with sole proprietorship is there is no limited liability.
Right.
Right. So limited liability, the entities that you would form, create besides a partnership, a general partnership, don't have any limited liability protection. They will provide it limited liability protection, but partnerships and sole proprietorships do not have it. So question then is just like, the next question I ask people is, do you have employees? So if you have a partner, you're going to want to consider either formalizing your partnership, because you don't want the default rules for partnership to apply to you necessarily, and you would want a partnership agreement that lays out the stuff, the agreements that you have with your partner. But if you're not going to go that and you want limited liability protection, what that means is, if a customer files a lawsuit against your LLC, they can't come get your house unless it's in the name of the LLC. They can just get the assets of the LLC. So your investment LLC, that's all you're at risk for. That's your limited liability, right? Is what you've put into that LLC. If you don't have that in your sole proprietorship and you mess up, I can go after your house, right? And so that's kind of a scary thing. Like for you, I can go after your house too, and not to mention your house, I can go after your dad's house too, because he's your partner and he's liable for everything you do. Okay, so now the next question is, do you have employees? Okay, so like if reality is, if you are taking the photographs, they're probably going to be able to come after your house anyway, because you're taking the photographs and you did the negligence, right? So if you don't have somebody that's an employee or an independent contract that you've hired to do this, that's doing stuff for you, then you're going to be personally liable anyway, probably, because you're doing all the work if you don't have employees. If you have an employee, the law implies it was called vicarious liability. So your LLC, if you have an employee and you are not organized as a limited liability company or corporation, even an employee who hits a bus full of nuns, then you who hired the employee are going to be liable as long as they were doing what they were doing was in the course of their employment. Okay. You potentially could still be. Just depends. Ideally you wouldn't. If you had all set up properly, you could maybe not. But if you have something with your client that says that if you subcontract, they look solely to subcontract, but they're typically not. They're typically looking to you.
Yeah,
right?
the client's probably not going to sign that.
Yeah. So
The question I have is, do you think it would be more advisable to become an LLC than a sole proprietorship? And if so, how would we go about, how would I go about doing that?
okay. Yeah. So if my typical advice is, if there's more than one of you, you at least need a partnership agreement, but you're going to be liable for each other's actions. And so I think I don't like the partnership model, very much. The only times I'm okay with that is when it's a very passive business activity, such as holding real estate, leasing real estate. One in which you have very good comfort level with the amount of insurance that you could get would cover all the risks associated with it. So his first question is do you have a business partner or an employee, someone that you could be held liable for their actions? Okay. And so first question is that. Second is, what is the business activity? Is it just holding real estate and leasing it? You can buy enough insurance that's going to cover you on something like that, probably. It's pretty cheap too, Okay. But once you get employees, and if your business activity has some element of risk to it, where you could be liable for significant losses, and there's other people involved, I'd normally recommend becoming an LLC or organizing an LLC or a corporation. Okay. Some people feel more comfortable. It's like, I'll just get a lot of insurance. And it becomes kind of a cost benefit analysis. How much does the insurance that will make me feel comfortable cost versus how much does it cost to set up and maintain this entity's existence, right? And so that includes the filing fees every year for your annual kind of report that you have to file, plus your minimum F&E taxes, or the entity, if it's a limited liability company, is going to have to pay franchise and excise taxes with the state of Tennessee. So that's typically what I look at is like cost. If you have employees or a partner, you probably ought to be an entity. Okay, and to create one is pretty simple. A single member LLC in particular is pretty simple because you don't have to have a complex agreement that addresses all the multiple owners of a company issues. And so single LLC is not very expensive. I typically charge $1,500 for it, but you can probably get away with doing it yourself online to some degree. There are certain things that online, if you go online and just do the stuff at the Secretary of State's website, you'll get it organized. But if you really want it to be separate, you protect yourself from some liabilities, then you would, like, for example, if your entity signs a lease that you don't personally guarantee, they can't come after you unless you personally guarantee that list for them. Because the limited liability company is considered an entity separate from its owner, okay, except for tax purposes, and it's disregarded for that. We can talk about that in a minute. But anyway, so you would set up, if you set up your LLC, you also have to do these other things besides just file the document with the Secretary of State's office, and they don't give you those documents at the Secretary of State, so you have to either go to LegalZoom or something like that. But in the end, it ends up costing about the same amount as it is to hire a lawyer. So if you do all those things, it's important that you observe all the formalities and do all the things, check all the boxes of things you're supposed to do to set up your entity, because if you want the liability protection, you got to observe all the company formalities to make sure the separate existence from you is respected by a court. And so you have to have like officers, and you've got to act, or you have to set forth the ownership of the LLC, in a document that's not covered in the one you file with the Secretary of State. So if you want that limited liability protection, you've got to make sure you recognize all the company formalities associated with whatever type of entity it is. And so
I know that at some level here, you have to pay payroll. That's not in an LLC, is it?
Well, yeah, you could, absolutely.
You have to pay
Well,
payroll?
for yourself, you mean?
Right.
Okay, no, that would be a corporation.
That's what I thought.
Yeah, a corporation. You're not an employee of you are a member of the LLC. You're not technically an employee from a tax perspective.
Right.
So you have to pay self-employment tax, which is probably what hammered you, right? So yeah. And there are some accountants that will employ this S corp strategy, but there are some problems with it. And so yeah. Well, it gets you. There is a way that you can save by paying dividends instead of paying yourself salary and that kind of stuff. And there's some limitations on the effectiveness of that. And so I don't typically recommend it. Most of the CPAs I've talked to don't recommend it either. But there are plenty of folks. I've got clients that do it. So, but anyway, so once you decide if I need an entity, you have to decide which one. So you're an entity, you're a partnership. So you've chosen partnership. That is an acceptable way of doing it. The problem is it doesn't provide that limited liability protection, but it does save money. She doesn't pay franchise and excise taxes on a general partnership. So she saves taxes. But that's the thing. The trade-off the state is we're not going to make the entity pay tax as long as it doesn't have limited liability protection. If it does, then that's considered a separate person from you, and we're going to tax it as a separate person. And so
I'm having trouble now giving up. It's okay.
If you're on a deed but not on the mortgage, if someone else is on the mortgage with you as well, if something's happened?
Is this partnership property?
No. So my husband and I have the house. The mortgage is only in his name, but the deed has both of our names.
And the reason that is because the property is in both your names, right? So yeah, it sometimes it's easier for one person to get like the other person might not add any credit, like it actually may hurt it. And so it's pretty common for mortgage to be in one spouse's name or partner's name, and the other, but because you both own the property, you have to file the mortgage, be on the deed of trust or mortgage.
Right.
So
Okay, got it. So even though I'm not like fully on it, but if it's something where we're not.
your liability is going to be limited to your interest in the real property.
Got it, okay.
Okay, you're pledged your interest in the real property as security because you both own it. They got to have both of you for it to be fully secured. So
Okay, so my husband is not part of the business or anything like that, so that it's not like a full house. Is it, or is it?
okay, so then someone sues the business. Is that what?
Yeah, so like say, because my dad and I have a partnership.
Yeah. So
We all live at the house.
Yeah,
and
okay.
everything, but my husband, who's not a part of our business, the mortgage is.
It's safe.
the same as-
Your house is safe in that situation. The reason why is because it's your creditor.
Right,
It's not
my
his.
husband.
It's not his.
Right, so if we were in a partnership together, then it's.
Yeah.
So if only one of us is, then it's not
Right.
an issue with that.
Yeah.
And
So
did
that-
you set it up that way for that reason?
No, but it was originally, it was just one of those, I had like a higher student loan debt at the time, and he didn't, so we just made his credit really great, and then put all of my income.
Towards
worked
paying your
together,
loan off,
so
yeah.
it just went all to him, and it just was a better thing at the time, and the way it worked out, but then, like I said, when we went to do the partnership, when we first initially started doing it, we weren't doing as much business as we're doing now, so we didn't jump right into the LLC. We go back and forth on it, obviously.
Yeah.
The big
Yeah.
asset is the home, but that's.
If it's protected, then yeah.
If it's protected, then it's like, okay, well then there's nothing really else, and my dad, they don't own. They live with us, so.
Right. Yeah. I could make an argument for staying in a partnership in that situation too. But if if God forbid,
Yeah.
you guys got divorced or he passed away, then at that point it would change pretty significantly for you. So.
Don't die for like 50 years. Retire,
Exactly.
We have an exit
exactly.
plan, babe.
So first question is like, when do I need an entity? So if you got more than one partner, owning the business, you've got an employee, anytime you're liable for someone that actions, the limited liability protections does protect you from contracts too. So like if the LLC signs a lease, but you're not personally guarantee it, then you're not liable for the lease payments. The company is. Okay. So in that situation, that kind of leans towards setting up an entity as well, but a lot of times landlords will require you to sign a guarantee. So it kind of goes away. Right. So, but if you're buying a lot from vendors who don't ask for a personal guarantee, again, you're kind of protecting yourself from, if you build up a big bill with them and they can't pay it, you're not going to be liable. The LLC is. Okay. So it's really just, when do you feel like I need that limited liability protection? And so the next question then becomes, which entity do I choose? Okay. And so I will just tell you right now, about, if you're going to choose an entity, about 80% and of the types of business we're talking here, about 100% are LLCs. Okay. They present a lot of advantages. Okay. They give you limited liability protection, but unlike a corporation, they don't pay tax, except some tax at the state level. They don't pay income tax separate from the owners. Okay. All of the income and all the deductions that you would put on your tax return flow through to the owners of the business as though they did them themselves. So if you have a 50-50 partnership, which I would make an argument not to do a 50-50 partnership, but if you have a 50-50 partnership, then 50% of the deductions comes to me and 50% of the deductions go to my partner. 50% of the income comes to me. It's though the LLC didn't earn any of it for federal tax purposes. Okay. And so a corporation, a C corporation, is different because the C corporation has to file its own income tax. And then whenever it distributes profits to its the individual owners, the individual owners pay tax on that part. So those profits that are distributed to its owners are actually taxed twice. Okay. So there's a level of double taxation. Okay. Now there are ways around the double taxation. You can pay yourself more salary. That's deductible. Okay. There's ways to prevent yourself from giving dividends. You can bonus yourself money too. But at a certain point, if the company gets big enough, you start getting to issues of unreasonable compensation, and the IRS can recharacterize the comp as a dividend. So LLCs are very handy because they present some tax advantages. Okay, they're a pass-through tax as a partnership, a tax partnership. The other benefit of an LLC versus a corporation or S corp is that it gives you a lot of flexibility in how you can structure your governance. Okay, you can set it up. It's basically set up where you can choose the form of LLC that mimics any of these other types. So a member managed LLC is a category of governance, and it mimics a partnership. Okay, and there's some other categories of partnerships like limited partnerships and LLPs. We're just talking about general partnerships right now. Okay, you could also have what's called a manager managed LLC, which mimics a limited partnership. So member managed mimics a general partnership, and a limited partnership. A manager managed mimics a limited partnership, where there's a general partner who makes all the decisions, and the limited partners are passive investors. So a manager is like the general partner in a limited partnership, and the other members are like limited partners that are passive. Okay, more passive. That means they're not actively involved in business, even though they may be. It still mimics that governance structure. And then a director managed LLC, or also known as a board managed, mimics a corporation. You got a board of directors and you got shareholders for a corporation. So the same with a board managed or a director managed LLC. You have a board of directors and you have members of the LLC. That's what they call them instead of shareholders for the LLC. Okay, and so it presents a lot of it's convenient to choose a governance structure that fits you well, but still has the pass-through tax treatment. Okay, that you have with a partnership, a tax partnership. The other advantage is that you can also, because of the accounting rules and the tax rules associated with accounting, you can make very creative arrangements on how you split up the income and expenses. Okay, and that presents a lot of advantages. Disadvantage of an LLC is a little more complicated to set up and to kind of like track. Okay, and the tax situation is a little more complicated. You've mentioned one in particular. As a member, you are not an employee for tax purposes. You have to pay self-employment tax on everything that you get distributed to you. So
Speaking of,
or not even if it's distributed. It's even if it's earned by the LLC.
so there's self-employment tax mandatory on the LLC, also on a sole proprietor.
Mhm.
Yep, thought so.
Yep.
And
so
then,
and what that means is, with a corporation, the corporation pays half your employment taxes, and the employees pay the other half. Okay, an LLC, the owners pay the full 15%. Okay, or it's a little less, but up to 15%. And same with a sole proprietorship; they pay the full self-employment. Means you pay both sides of it. So
this good? You liking this? Yeah.
Do all the entities get the benefits of like deductions?
So to the extent they pass, so the corporation has its own income and deductions. Okay, so when it files its tax return, it's just like if you did it, like you were doing it yourself. It has to file its own tax return, and it has all the incomes and deductions on its tax return. The ones that are passed through, that are taxed as a partnership, and we'll get to the S corp in just a second. Those pass, the entity doesn't use them. It gives them to you as the owner. Okay, it passes them through your pro-rata portion of it. So if you own 50% of the company, you get 50% of the deductions, 50% of the income. Okay. S corp is a different type. It's a corporation. It's governed the same way as a corporation is, but it gets some element of pass-through treatment, largely similar to like a partnership. It doesn't pay tax on its own. But there are some really complicated rules that basically can disqualify. You can blow your S election, is what you'll hear people say, if you have too many owners of the company. If you have a non-qualified owner, so like some trust wouldn't qualify as that. Another entity cannot own an S corp. It has to be an individual or a qualified trust. So there are some ways you can. And the other thing too is you have to distribute revenues out to partners, out to the shareholders equally, pro rata, exactly pro rata. Okay. You can't, like in LLC, I can say, hey, you're going to get a priority distribution of $100,000 because you're providing a lot of services to the company. Okay. And so what do you do instead with this? Because you're still allowed to pay yourself a salary in S corp. And so it is, I'm not a tax guy, but between S corp and LLC, most of the time LLC is most problem. So from a tax perspective. So those are the types of entities. Which one you choose is dictated a lot by your tax situation. It's dictated by the limited liability protection, whether you need it or not. But most of the time, service-oriented companies like yourselves, they're going to, and there's no employees, they're going to create a single member LLC. That's what they're going to do. So in that situation, you'll have limited liability. So like unless you're personally guaranteeing stuff, you're not going to be liable for the independent contractors or employees. Personally, you won't be liable for that. Only the company will. Any contracts the company signs that you don't sign a personal guarantee, your assets are protected. So
the difference in personally guaranteeing something and the company, like the way you sign it, or
so there's a separate section of the document that says guarantee, and it says if you sign it as a president, no liability goes to you. Okay, if it says I personally guarantee that the corporation or the LLC will pay the lease payments, then you're on the hook as a guarantor. So it's typically a separate page.
People that make like other investments, such as like real estate, stuff like that, to offset some income and just like use that for tax benefits. Are there some entities that doesn't work for or would work less for?
If all you're doing is investing in real estate, you would very much consider not forming an entity at all and just owning it in your own name.
Yeah.
Okay. If you start getting a lot of tenants, in like a large amount of properties, people oftentimes will do so just because the risks is magnifying every time they sign up a new tenant. And so the big reason why you don't want to, if you can avoid creating an entity to hold the real estate in, is the F&E taxes get very high because there's a portion of it. It's the excise act. I always get confused which is which. But one of them basically is the tax is calculated on the value of your holdings, their assets. So real estate gets pretty costly. And so a lot of people try and avoid filing an entity to own real estate in, creating an entity to own real estate in because of the franchise and excise taxes that come through. So it's not just it's the value of the property plus the income that comes through it. So it gets taxed through the F&E tax scheme. That's a good question though. And that's why a lot of people they'll hold it in the form of a partnership because it doesn't have limited liability protection, therefore not subject to F&E taxes.
Okay.
So if you have two of you that own it together. But I would say make sure you get a good partnership agreement. Looks like you were very good to do that, Michelle. That's good to hear. So yeah, that's kind of the entities. It's a lot of basically I would suggest hiring a lawyer. This is one of those things that people oftentimes don't do right because it costs money and there's no real return. Like at least on a contract that someone sends you, you're going to get some business out of that, right? Creating your entity and like doing it right, there's nothing, you know what I mean? It's just like you're just potentially protecting yourself from some issue in the future. And so it's hard, but those issues in the future can be very, very difficult. And LegalZoom and places like that can be pretty bad. Sometimes they're just not very good at it. And number two, a lot of the forms they give you are not what you would actually want in your forms. If you really had someone sit down and talk to you about what could be in there. And so it's not good. I would definitely recommend find you a good lawyer that you can ask these questions to and help you create your entity. So is that helpful? Any other questions about entities?
I had a question about contracts that I just wanted to clarify. I had heard through the grapevine somewhere that a contract, if it comes into question, it favors the person who didn't write it. Is that correct?
That's true. Although a lot of lawyers will put in their, this is crazy. This little guy's getting me bad here. Somebody just needs to hose me down with a defogger or something. But anyway, a bug fogger. So that is true. There is like this, in some states, there is basically a deference given. So they will interpret a contract against the drafter if it's unclear.
There you go. Okay.
Okay.
Oh, if it's unclear.
Yeah, if it's unclear, right? Okay, and so they will say basically, but there are also times like a good lawyer puts in a lot of in their contracts. You had an opportunity to get a lawyer to look at this, you didn't, and so therefore we're both agreeing there won't be any deference given like that.
Well, and I see a lot of times a mediation clause too.
Yeah.
Required mediation.
Yeah, mediation, arbitration I honestly, about 50% of lawyers, I don't do litigation, but 50% of the people I know who do litigation love them, 50% of them hate them. So I don't know. I just kind of like, I just ask the client. I don't know which one's better. You decide. So.
Have you seen a big effect now that they've changed the law about non-compete?
So not really, because a lot of the folks that I deal with are kind of higher wage earners, and they're exempted from that ruling with FTC. If you make $147,000 or more, I think, then you aren't subject. And no one, it only applies to employees. It only applies to employees. It doesn't apply to independent contractors or to owners' agreements amongst owners of a business. Okay, it only applies to employees, and it only applies if you were make less than $147,000.
So if you're a subcontractor for it, they can still
Yep.
put a non-compete.
Absolutely, they can. It doesn't have any impact. If you're an independent contractor or a subcontractor to a larger contract, absolutely. And that's a tricky one. That's a real tricky one. That's whenever you're dealing with larger companies and contracting with them, a lot of times they'll throw in those agreements that say you won't do work with anybody else in our area of our business segment.
For like 2 years sometimes.
Yeah, they'll
It's a
say,
long
yeah,
time.
they will.
And now with most people being on the internet, it wouldn't just be your local geographic area. It could be our whole genre or our industry.
Yeah.
Right?
Yeah, it could be. So I've seen some real big gotchas on that. There was a client, my client was looking to invest in the company. When I saw this, I said, you should not invest in them. But there was they basically entered into a contract with a large company. It was, basically it was a startup. And so there's some new technology. They were doing some work with this other company, and that company had in their agreement that they got a right of first refusal if they tried to sell their company. And so that's a pretty egregious thing to put in an agreement like that. But like they really just gutted a lot of the value of the company, because the right of first refusal, are you familiar with what that is? It basically just means that they have to go and offer the company first to their vendor or their customer, whatever it was. It was just like, yeah, this is going to chill. If you have to wait till they say yes or no, then you're going to have a hard time developing a market for your business if this person's got the first right to buy. So you spend a lot of time putting together an offer, trying to figure out what this thing's worth and putting together an offer, and then they say yes, we want it. So nobody wants to do that. So what other questions you guys have?
So say, like us, we've been in business 1 or 2 years and we've never met with a lawyer, but now you talk us into it. What would be the things that we should ask them when we go?
Ooh, that's a good question.
I'm going to erase some of this so I can write some of this up there.
I mean, what I would suggest is, so there's a couple of things, an area I wasn't really asked to speak on, but I think that's like, if you're starting a new business, here are the things I think you need to make sure you do. One that is number one is get your entity documents set up well to begin with, because it becomes an issue if you don't future. The second thing I would say is, it's really tempting to avoid doing this, but trademark your brand. Okay. Particularly if you have any desire to scale and grow whatsoever, because there's two things. One is, you need to make sure you have a right to use the mark. Okay. Your name. That's the biggest one, is the name, right? So there's a bar on Ray Mears Boulevard. It's called Buckethead Tavern. Are you familiar with this bar? Oh, you are. Yeah. It's kind of like known in the area for like, as an example of a faux pas. So when it first was created, it was called Buckhead Tavern. Well, they did all their logos and all their stuff, right? Buckhead Tavern. You know, all their branding, the beautiful sign out front, which is a nice sign. It's got a big deer on it, with antlers and all that stuff, right? And so, well, turns out there was a Buckhead Tavern in the Atlanta area, and they sent them a cease and desist order or letter, and at that point they had to rebrand completely. All those tens of thousands of dollars they spent on menus and signage, and all their brand development, everything was like down the drain, And so, one, make sure that By the way, the way they fix this is really funny. If you go by the sign today, there's a bucket on top of the deer now, and it's called Buckethead Tavern. So they reached some settlement where they allowed them to use Buckethead Tavern. So anyway, well, that was kind of funny. But yeah, that's the one thing, is make sure you have the ability to use it, right? No one can stop you from using your name, because then you have to rebrand everything. The second thing is, you want a good quality mark that you can prevent other people from using too. Okay. And so not all names are created equal. The trademark office, U.S. Patent Trademark Offices, they've created, like the statutes have created categories of trademarks. Okay. And I don't know them all very well, but I'll tell you a bad one is one that is basically just generic. So like, if I'm like Book Inc., because I sell books, okay, I can't prevent anybody else from using Book Inc. They can't stop me either, because it doesn't really have any value, right? Okay, so, but if I say book, then it also could be descripting. Like, I had a client was called Event Booking. Okay, they book event. They had software that books events. It was accounting software, inventory management software. And so that was descriptive. It's harder to get that trademarked, okay? Because he was able to, because he'd been using it for 10 years. And so once you use it over time, descriptive marks can be trademarked eventually. And then there's a couple other categories, but then you have like Google, which is considered, arbitrary is the next one. So for example, like Nike is an arbitrary brand. Nike is a goddess of something, right? And so it doesn't have anything to do with shoes, right? But so it's like, it'd be like me calling a law firm like Cows R Us or something like that. It's like arbitrarily assigned to this, our company. The best of all of them, the easiest to protect, and the strongest are fanciful. So Google is an example of that. They just made up a word, right? And that became their brand, And so, but the point is, the stronger, the better ability is. The name you choose can have levels of strength and quality in terms of your ability to prevent other people from using it and being able to get it trademarked. And so, so you don't want someone pulling up next to you and setting up a shop that does exactly what you do with the same name, So make sure that you choose a good mark and you register it with the U.S. Patent Trademark Office, because it gives you remedies that you don't have under common law. You don't have to register it to own the mark and to prevent people from using it. But if you want damages from someone who has got it, under common law, without it being registered, you have to prove you lost actual business to these people. And it's very difficult to do that. And so, but if you file and have it registered with the trademark office, then there are statutory damages, like we can add it to big numbers. And so that would be one I would say for sure.
Does the U.S. Patent and Trademark Office supersede like the state trademark?
It does. It does. If you're filed there, you're basically registered in all the states. So
They're global.
there is actually there's a lot of countries have become a party to a treaty that recognizes global IP, and use in other countries. And so if you file with this global filing organization, you can get it's either that or you file in whatever country you're doing business in. So it's a lot simpler just to file there.
So the protection too, just to protect, like say you don't hear someone else uses the name in another state or, in another country, but more that they could stop you from using your name.
So if one of the problems with not only making sure you have a good mark and that nobody's using it when you start to use it, and that it's a good mark in terms of like quality, okay, you also have to kind of police it to make sure other people aren't using the mark, okay. And so if it turns out someone in Kentucky starts using it, and then you go over, you then branch out into Kentucky and find out they're using it, you may not be able to stop them from using that, because at times, if you're not policing it properly, because what you should have done was stop them when they first started using it. You may end up in a situation where they're allowed to use it in Kentucky. Courts can. I don't know all the rules of that, but there are settlements that happen. Ideally, what you do is you have an IP attorney just do a query for you periodically. But you can do that yourself too. You can do that yourself, and you can actually go to the U.S. Patent and Trademark Office and see the trademarks. Tricky thing about it is that, like, for example, like I was talking about the fanciful being a kind of a strong name, so like Google, right? I couldn't do anything with the term Google. I couldn't start any business with the name Google because it's fanciful and it's been around for so long. I couldn't do anything about it. It's established a pretty, it's basically like legendary mark, right? And so, and then, but I could do a McDonald's potentially to sell hardware equipment. Because the trademarks are issued in categories, right?
Oh.
And so McDonald's may actually be Google quality at this point. I don't know, but I just kind of chose them. But
It's also people's last name.
there's also some issue there too. But you could not do a McDonald's restaurant at all, I think, at this point. So yeah, you could do it. Yeah, I think you could do that potentially. Yeah. So.
I had a question on if I need an EIN number.
Ooh, good one.
So that was another thing you need to do as you form an entity is to get an EIN. And they pretty much all entities need an EIN. You guys probably may not have one for your general partnership, do you?
No, we have.
Okay.
But just when you go on to, because you can just do it yourself on the IRS.
Yeah.
You just put in your thing, you put the main partner, and then your other one, you put in your social. Do not put a DBA unless because they ask you what your DBA is, but they're just kidding.
Lesson learned?
It is a lesson learned. It got fixed. It was really annoying. It asked you because I felt like DBA, if I just put mine, I thought I had to put so us or my name in there. I didn't.
Yeah.
It's not.
It gets a little confusing.
So then I got that from the EIN, and then there was got registered, and I called them, and they were able to switch it to where instead of a DBA, it still has my name there, but it's something else. But my dad's name is still the second one, which is not
Yeah.
But yes, we have an EIN.
I will add something about your EIN. And this may seem like a real reach from what we're talking about. when you send marketing text messages to people, blast text to several people, like I sent you all a reminder that you could come here, that's a marketing text message. So I have to have your permission to do that. But to set up my phone to be able to do that, I had to jump through certain hoops which did not exist a year ago, 2 years ago, like they're new. And you have to have an EIN for your company to get, she's going, yep, yep. You have to have an EIN for your company in order to get that phone set up the right way. And it's all 100% to prevent spammers and because imagine, you know how bad your email is with spammers in there. And they're working hard to always keep that clean. Imagine if your phone was like that. You just wouldn't even want to pick it up, right? And the FCC is trying very hard to not let that happen to your phone. That's why we have to jump through the hoops if we want to send blast text messages, which we do. And so you will need an EIN for that, even if you don't need it for anything else, if you decide you're going to send text messages. Back to Chris.
Yeah, and I think right now the practice is, if it's not even required, that because I'm not a tax guy. Typically, the CPAs typically help people get their EIN. Okay, and so although we can, it just typically I recommend they do it because there are some instances where you don't have to have one. But I think right now the practice is, and I think even the IRS fairly recently has been requiring every entity to get one. So
Because when you, on the website, we had to set them up for states as well, because the state has to open a state bank account, you have to have an EIN. So a lot of practice.
your bank, if you're going to do a partnership bank account,
Right,
you have to have a separate
yeah.
FEIN.
But there's options to choose sole proprietorship, LLC, and so when you're paying your EIN, you choose which of those
Yeah.
in there. So, and then the questions change based on which one.
One of the other things is like, also there's a box to check, how do you want to be taxed, right? And so one of them is, so you can choose an LLC to be taxed as a corporation, for instance, even if you're an LLC. And there are some reasons to do that but it's very few would ever need it. So one of the things we didn't talk about entities is like what type. If you are scaling a business, if you're developing a technology that you're going to scale, then there are some advantages to business combination transaction structures that are tax advantaged and only available to C corporations. And so a lot of companies you'll see that are scalable, trying to grow really large, they'll set up a Delaware corporation, the corporation, because everyone's very comfortable with Delaware's business laws, and so they will So I set up Delaware corporations pretty regularly. So
don't you have to have an address in Delaware? You just get a PO box or something, and
you don't have to have the principal office in there, but you have to have a registered agent there.
Oh,
And you have to, if you don't have an office there, then you have to hire a registered agent service, basically, which costs you about $500 a year.
Yeah.
So,
but it's worth it if
you're a Delaware corporation.
Yeah.
It's worth it. So.
Can you do one in Nevada? They have similar laws, but they don't have that requirement.
I think you still have to have a Nevada registered agent, but I'm pretty certain you have to have something there still. So we've set up a couple of Nevada entities over the years because they have some there's some favorable kind of trust issues and things like there's some really well known credit shelter trust structures through Nevada that people use a lot, and sometimes corporations be involved in that ownership structure.
So looking back here, when you're getting started or anytime in business, why to use a business attorney? So we got the entity document preparation, we got a trademark. The EIN your CPA can do.
Yeah.
What are some other?
Another thing you'll have to do is there is a. I have to send you. I can give this to you if you'll remind me later.
Sure.
But there's federal government adopted a rule last year that requires every entity that's formed to basically, it's a Corporate Transparency Act. You have to file with the FTC online, basically notifying who the owners are, their social security numbers, all this stuff. And and so it's a real big pain in the rear end to do, but every entity has to do it now. And so, but yeah, whenever if you come to that point, and actually, if you have an existing entity that you've not done it for,
Is that the BOI?
you've got to go do it. Yeah,
BOI?
yeah. And so you have to go back and do it now. Okay.
Every one of us who looks at our list partnership, we're supposed to do one of these.
I don't know that partnerships are required. I honestly haven't done one yet.
So entities with liability limitation have to.
Corporations, LLCs, limited partnerships, and those things. I don't know about partnerships. I quite honestly don't remember. I would think so still, but I don't know. No, it's always that. If you can, someone send me an email, I can.
Did they like notify people that they had to file one? I mean, I've never gotten like a letter or email saying, you're registered business.
No,
You
they
have
didn't.
to file this. I wouldn't even
They
know
did not.
where
They did not.
to-
They do not, because it's coming from the federal government.
It's just a law.
And people aren't filing. People don't file this stuff with the federal government. They file with the Secretary of State and the state they're organizing under. And so federal government doesn't even know what entities are out there to send it to. Now the IRS could potentially have done so, but I'm not aware that they did.
Is there a website
Yeah.
where they're supposed to file these on?
Yes.
Mm-hmm.
Yeah. If you Google that right now.
Or you could Google corporate transparency.
Yeah.
Look,
And
she's on it. She's
just
on it.
Yeah. It's really kind of it doesn't cost anything. It's just putting information in. It's supposedly because they want to be able to track like terrorists and stuff. So, and gang.
They want to know who actually owns the companies
Yeah.
and the corporations.
Yeah, but that was one of the things people didn't want people to know.
Is that why there might be a difference?
You should have a partnership name, right?
So we have like our business name, Williams Photography.
Yeah.
We had to give our two names.
Yeah.
Like when we got our EIN.
Same thing there. You both do have to use your names. Yeah. And so whenever you first file, maybe you don't have to do social security numbers. I can't remember now. When you first file it, you file one as a business owner, you can set up your own personal BOI number that you can then utilize in the future for new businesses. So you don't have to kind of put all that information in once. So. Let's see. Any other on the what I was going to say, the entity document preparation. If there's more than one of you, I just want to make sure, like more than one business owner, it is very important that you get it documented properly, because if you don't document the ownership percentages, or if you hire an employee and you're promising to give them some equity, give them the equity. Or make sure you just want to make sure you kind of follow through with these things. You don't just let it linger, because then there becomes this question: well, how much did you say you were going to give them? They're saying 15%, you're saying 10%. And I would just discourage all of you, from if you do bring business partners in, think an employee that you're wanting to make a partner, don't jump straight to equity, giving them ownership. Because once you bring them in, it's hard to get them out, and so there are ways you can mimic equity through contract and employment agreement, whatever. There's ways
Even
that
profit sharing, right?
There's ways that you can, do just a profit sharing plan, there's ways that you can, if you do give them equity, you might want to tie it to some milestones of performance, and stage it over time, have some vesting schedule potentially, so that they don't earn all at once. I'm just saying, like, when you get to that point where you're looking at making an employee an owner, just talk to somebody about the alternatives.
Yeah.
And just don't be giving out points to everybody that does contract services for you too. I can't pay you, but I'll give you 5%. There was a lawyer in town who kind of like pretty widely known that they take equity in their clients instead of making them for a discounted fee or no fee. And if I do like a $3,500 entity set up for you for 5%, like 5% of zero is zero. You know what I mean? So it's like when you first start out, and the value doesn't seem like that big a deal, but then later on, you know, when the company's worth $10 million, that 5% is worth a lot of money. You know what I mean? For that $3,500, I may never talk to you again, you know? And so it's just
Until
like,
it's time to sell.
yeah,
Hey,
so
I
don't-
have 5%.
and so don't mean it's like passing out points to people, you know, percentage points of ownership.
So I heard a horror story, and I think it's still going on, a partnership that not very much. What was not clear was how much actual work was going to be done by each person. So one of the partners just
Stop working.
stopped working, stopped coming in the office, would come to meetings and have say over what's going to happen and disappear again. And the other partner, just the whole company was on their shoulders.
Yeah.
And this went on for like a year and a half, I mean, a long time. And the other partner was trying to find investors, couldn't bring on an investor without the permission of the absent partner. It
Those are
again,
those
just
multiple owner
been
issues.
so
What happens if one of
hard.
like you're in a business partnership with, say you two are in a partnership together, you know, and you know, she passes away. What happens to her ownership interest? Well, if you don't have an agreement that says what happens to it, it goes to her spouse or her parents or kids, or
And then
that's
they're
the-
running your business with you.
then you're running your business with you. Like, so if you don't have an agreement that says that you have an opportunity to buy or interest at her death, then you're hosed, you know. So
That's a legal term.
that's probably some bad word to say. I don't know. I don't know
That's
what
all
it means.
right. We like how real you are.
So yeah, so yeah, it's very important. Always multiple owner issues that you really think through them well and get them documented well, because I just can't tell you how many times they become problems. And don't pull it off the internet. So yeah.
Yeah. And, you know, someone, like you said, they could die, but they could get very, very sick
Yeah.
and literally not be able to work. And you need a provision for.
Yeah, we typically put, if someone is providing services, like the partners, when they stop providing services to the company on a full-time basis, they get their interest bought out.
Yeah, for whatever reason.
Question on insurance. So since I'll be working with clients who are on coaching, do I need a medical malpractice professional, or is there any difference between the two?
Yeah, it's probably just going to be, since you're not providing nursing services, are you?
No, but I was planning on doing vital signs and, you know, if I needed to
Yeah.
refer them to seek medical help. That's as far as.
Yeah, I would talk to a medical malpractice provider, like someone who sells that.
Okay.
At the very least, you're going to need some sort of errors and omissions, policy, but there may be some sort of, professional policy that would protect you as well. The one thing you have to be very careful of is you're not allowed to practice medicine, as you know, and some of the stuff you're doing is going to touch upon that stuff, and so you may need, a medical director or something like that to help if you don't structure it properly. I've got a name for a guy that helps with those things. Like he's my healthcare regulatory guy. And so I can give that to you if you want to see me after. So
I'm worried about regulations and science. I've worked in a position where I had to review the code of federal regulations and state policies, and it's always gray.
yeah, there's a lot of gray.
So I need.
Yeah, I'll give you a good example. We had a client, because he was my former partner. We had a client that was wanting to do like hormonal treatments. It was kind of like a Hims company that's kind of more like hers, I guess. Because I think there's a hers now, right? So something like that. It's like different hormonal treatments and stuff. And so, but they wanted to do it via telemedicine, and so there's a lot of gray, particularly in Tennessee, but also in the federal level. On how to do all that. So.
We have a question in the chat, and the question is, I would like to know more about the Tennessee laws of hiring and paying my minor child to work for my business. What are the limits and exclusions?
I don't know the answer to that.
Okay.
Yeah, I'll answer that. If you can
Okay.
get your information to Rita, I'll get the answer and send it to you. So.
Okay, great. I like that answer too.
What kind of documentation do you need to have?
That's good.
I'm glad you said that because I actually had that on my list to talk about when we were talking about contracts. So, so 1099 versus employee. I mean, I think everybody who can afford an employee wants to just hire them as a 1099, right? And so, but the thing is, it doesn't matter what you call them. It's like federal government looks at it is if it walks like a duck and quacks like a duck, looks like a duck, it's a duck. It doesn't matter if you call it a dog, you know. And so, so it's a fact in determining whether someone that is working for you as an employee or an independent contractor. It's a fact analysis. Okay, so facts and circumstance analysis, and it looks at a lot of different factors. The most important one of all of them is, do you have an independent contractor agreement? Okay, if you do, then you want to put in there all the things that the federal government says makes them look more like an independent contractor as well, such as they use their own equipment. You know, they dictate when and where they work. You know, and things of that nature. You know, the process and how they actually conduct the work is like their discretion. You know, and like any number of these may lean more towards employee in your relationship, as long as enough of them don't. You know,
Yeah.
and so so for example, you're doing an event and you're hiring someone to kind of do some stuff for it. Well, they got to show up at the event when the event is. It's like you're trying to tell them to show up. You know, but you know, are they using their own camera? Are they using their own ponies? So.
I've been in a situation like that as the 1099 person. So taking baby pictures in the hospital. And I knew it was close to the line because I provided my own equipment. And they told me, which hospital to be at, what time I had to be there, exactly the process to follow. And I thought those kind of things were making it. And
Did they get audited?
The state of Illinois decided these people are employees. Just like that, with a stroke of a pen, and they owed back taxes.
because
and then they just made the whole nationwide, made it employees nationwide.
Because the employer owes 7.5% employment taxes, you know, so.
So that maybe because you have somebody who like has an actual schedule type thing versus.
Yeah, they made our schedule. So the difference would be.
Like, here's an event, are you available?
Yeah,
to do that?
I think that'd be okay.
Yeah.
But.
And the difference would be if they would say to me, here's 5 hospitals, go take all the baby pictures the day after they're born, period. Then I would say, I'm going to use this hospital first, and then that one, and I'm going to go to that room first, and then that one. But they told us exactly, it was an employee situation.
Yeah.
So, yeah. All right. Everybody, we still have a little bit more time, and I'm going to check the chat again, see if we have any more questions. And before you leave, if you enjoyed this and you would agree to it, we would like to get a little video from you just to say, hey, I had a great time. I really enjoyed this Business Growth Collaborative, and we like to use those on social so more people will know it's a great thing to come to. And did you say you have some handouts or something?
No, I don't. I have some materials that I prepared, but my assistant wasn't able to get them in a PowerPoint. So.
Okay. We still have time for more questions.
All right. Great. Thank you, guys. It was fun. Hope it was helpful. And if you please send them out my full contact info. It's on my emails. Yeah.
Okay.
I'll let you guys feel free to contact me about anything. Email me about that referral if you could. Okay.
All right, everybody. I hope you enjoyed that. We're going to end this live now, and you go ahead and put more questions in the chat or in the comments, and we will get answers for you. Thank you so much for being here. See you next time.